Stocks dip after a steady opening but recover to trade around the flat line as global markets remain weak. IT and healthcare lose ground while metals and PSU banks buck the trend today.
Hero MotoCorp skids after margins shrink and economy segment growth concerns linger despite analysts turning positive on the two-wheeler sector as a whole.
Amara Raja Batteries charges up, pulling Exide in tow as the street cheers a sharp improvement in the profit margins and a pickup in the sales across the segments.
Ajanta Pharma, Orient Electric and Schneider slide while SKF, GMM Pfaudler, Ethos and CRM Silk jump post earnings. Oil major HPCL slips after analysts downgrade the stock while IEX sulks on a weak update.
Hello and welcome. You tuned into Business Lunch. I'm Nisha Poddar and with me as always is my co-anchor Pavitra Parekh. So the market today is looking tentative. In fact, Nifty 50, if you really take a look at that, in a matter of about 100 odd points, it has been going up and down in the trading session off the low point of the day. But at the moment, quite a bit on the flat line with hardly any gains, but still holding on to that 18,000 level. So that has been the trend for the past three trading sessions. In fact, Bank Nifty is the one which is taking a deeper cut today, 0.3% down, underperforming the key indices, and mid-cap also are pretty much in line with the way the financials universe is trending. So therefore, advance decline ratio is on the side of the advances at the moment, but the overall market sentiment looks a little tentative. Reliance Industries, the big boy, is one of the biggest contributor to Nifty 50, and Adani Enterprises, look at the kind of big rise this heavyweight is seeing today, close to about 4.5% up in trade. And some of the other ones doing extremely well are Bajaj Finserv, Hindalco, Ultratech, and even JSW Steel from the metals pack.
All right, so that is what is happening in terms of the metal stocks. If you take a look at the PSU Bank Index, that for this week is still doing well. So even though the Nifty Bank is down, the PSU Bank Index alone is one of the top sectoral gainers. That one is up over 1% today, but for the week it's still up almost 3%. That's what's happening with the entire space. In fact, take a look at some of the smaller banks, the likes of Karnataka, which are rallying for the third straight day. It's up 18% right now. Bank of Maharashtra seeing a gain of 8%. Dhanlakshmi is another one. I'm just naming a few, but this entire sector has just been on fire. On the downside, it is the IT stocks which are seeing some cuts and some of the pharma names as well. Yes, like Nisha pointed out, there is a little bit of tentativeness in the market, but considering the fact that you have the jobs report tonight, you have SBI declaring results tomorrow, you have Bank of Baroda declaring results tomorrow, perhaps that caution is understood. So that's what's happening with the market action. We'll get back to that. But first up, let's get to the individual stories. Battery makers are surging in trade on the back of a strong showing from Amara Raja. There's a sharp 140 basis points uptick in the margin also, which is brought it back above the 13% mark after 5 quarters. So Sonia is here to take us through the details and to tell us why the battery makers are surging.
Well, thanks a lot for that. As you rightly pointed out, the battery makers' stocks are doing very well. This after Amara Raja reported a very strong set of numbers this time. It was an all-round beat for Amara Raja batteries, but the big takeaway really is that the operational performance has improved substantially. After 5 quarters, the management's margins are back to above 13%. For the last 5 quarters, the margins were languishing anywhere between 10 to about 12%, and now it's come in at 13.2%, which is a gain of 140 basis points on a year-on-year basis. That's largely because of the fall that we've seen in lead prices. On a quarter-on-quarter basis, lead prices are down by about 10% and the raw material costs, lead prices forms about 70% of the raw material costs for battery makers. Hence, Exide is also rallying in anticipation of that, of good numbers. Now, that brings us to whether there's valuation headroom or not for these battery stocks, and yes, there is. If you take a look at the valuations currently, both Amara and Exide are trading at around 13 to 14 times FY24 PE. This is at the lower end of their valuation band. The historic valuation band is about 12 to 18 times, which means that there is still more headroom for Amara Raja and Exide to grow, both in terms of earnings as well as valuations. Now, in the context of earnings, the commentary from the management was also very strong. They said that there is very strong demand in the automotive sector from both aftermarket as well as the OEM segment. Exports have shown a healthy growth, especially in the Middle Eastern and Southeast Asian markets. And the industry battery volumes, which was sulking for a while, have now started to recover, especially because of the telecom segment due to the 5G launch in India. Also, they have announced a lithium-ion battery manufacturing subsidiary, so they see significant potential in that space, in the electric vehicle space, and hence that announcement of the subsidiary there. All in all, no faults in the numbers, and Exide is rallying in anticipation perhaps of a good set of earnings. Back to you.
All right. Thanks so much, Sonia, for giving us that entire picture on the batteries business as well. But take a look at CAMS. They have just posted their result and the stock has seen a sharp spike up. Street seems to like the kind of improvement that they have shown on a QOQ basis on net profit and marginal improvement in the revenues. Keep that on your radar, but market is really reacting to the individual stocks on the basis of their Q2 performance. Let's focus on the pharma space then. Ajanta Pharma, that is down over 6.5% and is losing in trade after, remember, a sharp dip in margins in the second quarter has been posted by the company. In fact, Ekta Batra is right here with the details and also what the brokerages are making of these numbers and the future performance as well. Ekta.
Thanks for that. Well, yes, disappointment for Ajanta Pharma, considering that the margins in Q2 have come in at what has been the lowest quarter that a lot of analysts have seen since they even started covering this stock. So it is a multi-quarter low which is come in for Ajanta Pharma in terms of the margins, 20.9% versus 29.7% year-on-year and versus an estimate of around 25%. Now, the margins did weigh on the profit, which was down 20% on a year-on-year basis. Revenue was up around 6% That was largely in line because the street was anticipating around a 7% growth. India sales did well. It was up around 25% year-on-year. Asia was up around 30% on a year-on-year basis. What weighed down was US, the generics business. It was down 5% year-on-year, weighed down by factors such as price pressure, and the Africa institutional business, which was down 50%. Now, the margins, the company did say, were impacted by factors such as raw material, freight costs, price erosion in the US markets, and preponement of certain costs. However, the company is guiding for a second half improvement, and that's probably the only silver lining. Whether or not that comes through is something that the street would watch. So they've guided for around 26% in terms of margins. Asia is expected to grow 20% plus. India is expected to grow in high teens as well. Motilal has a buy with a target price of 1560. Incred has maintained an ad with a target price of 1439. Both these brokerages have maintained their call, but they've cut their earning estimates to factor in a couple of these headwinds.
All right, Ekta, thanks a lot for taking us through all of the highlights from Ajanta's performance. But another one that we're tracking, luxury watch retailer Ethos is buzzing after a strong quarter, where the company reported its highest ever EBITDA and profit numbers. So earlier, in fact, we spoke to Yashovardhan Sabu, who's founder and chairman of Ethos, to discuss the outlook for the company going forward. So let's listen in to a few of those comments. It looks like there's some trouble playing that. We will get back to that. I'm sure the team is trying to check. But in the meantime, by the way, take a look at the market. We did briefly move into the green as well. So there is a little bit of an uptick over there. What is looking weak today, like we pointed out, is the IT space. It is some of the banks also which have come under pressure. It is the private banks mostly which are under pressure today. So do keep your eye out on that. Something else that I quickly want to point to, and maybe... okay, so I wanted to take you through the Asia market action. I will get to that because we know that there's a lot going on there. But first up, let's get to Vodafone Idea. That one is under pressure today on the back of weak Q2 earnings. So let's get to that. Rima is here with the fine print.
Thanks so much for that. So the revenue growth for Vodafone Idea was pretty healthy at about 2%, but margins have contracted by 300 basis points to 38.6%. That, coupled with a big finance cost, has driven a large loss in the bottom line. So the bottom line loss stands at 7,500 crore rupees. The problem for Vodafone Idea is that it's losing subscribers every single quarter. This quarter, it lost about 6 million subscribers on a sequential basis. Compare this with peers, which both managed to report a subscriber addition. On a year-on-year basis, their subscriber base has now fallen by 18.5 million subscribers. And this even as the company continues to spend more to acquire customers. Their marketing cost has been going up quarter after quarter. If you look at the marketing cost this quarter, it was about 1,100 crore rupees, which is a good 68% higher than what it was same time last year. But that's not resulting in any, subscriber addition. Net debt continues to balloon. 2.2 lakh crore is the latest figure, as a result of which its finance cost is more than 6,000 crore rupees. So if you annualize the finance cost, we are looking at a number of 24,000 crore rupees, which is roughly 90% of the company's market capitalization. So debt losing subscribers is a problem for the company. Back to you.
All right, so the woes really continue surrounding Vodafone Idea, the third major telecom company in the country. All right, moving on then, we promised this to you, and let's get back to that story again. Luxury watch retailer Ethos is buzzing after a strong quarter where the company reported its highest ever EBITDA and also the profit numbers earlier. We spoke to the management of the company, and we got his outlook for the company going forward as well. In fact, the stock is buzzing. Keep that on your radar. All right, on that note, lots of numbers really to digest, so I'll give you a little bit of time. We'll slip into a short breather on Business Lunch. When we return, the Bank of England hikes rates by 75 basis points. We get you all the details on the central bank moves right after this very short break.
Welcome back. You're still tuned into Business Lunch. Here's an exclusive story that we're tracking now. Sources tell CNBC-TV18 that the government is likely to fast-track its divestment plans. So Yash is joining us with all of the details. Yash, what are you picking up on this?
Well, the next move on the divestment from the government side is going to be very crucial in reaching the divestment target for the year as far as the government is concerned. What we've been given to understand from our sources is that government is looking at fast-tracking the OFS issues for 4 PSU companies. Of course, OFS is offer for sale issues, and these 4 companies are expected to launch their offer for sale issues in the next 4 months. Which are these 4 companies? These are Coal India, Hindustan Zinc, NTPC as well as RITES. As far as the size and the details of these OFS issues are concerned, Coal India, the size is expected to be around 5,000 crore rupees, which leads to a 3% dilution of government stake in the company. Hindustan Zinc, that's the largest one, up to 10,000 crore rupees with a dilution of up to 8%. NTPC, 2,500 crore rupees with a dilution of about 1.5%. And finally, RITES with 1,000 crore OFS issue, which is being planned, a dilution of up to 10%. Do remember that the government had a divestment target for the financial year of 65,000 crore rupees, out of which 24,000 crores have been raised, and this next lag will help the government raise anywhere about 18 to 20,000 crore rupees, helping it reach closer to that target.
All right, thanks so much, Yash, for getting us all those details. Of course, government will need to fill its coffers, and maybe a difficulty going forward. But TTK Prestige not having a good day at the moment after the results have been announced. So it is almost a 2% drop on a YOY basis on the revenue front for the company. And on the net profit front also, it is a drop. In fact, take a look at the operational performance. 17.5% drop in the EBITDA of the company. So that, I think, is putting a lot of tremendous pressure on this consumer company. Margins at 14% versus 16.7% on a YOY basis. So keep that in mind, and that stock will be on our radar. But remember, US Federal Reserve had raised 75 basis points interest rate, which had really impacted the global markets as well as the Indian markets. Now let's talk about other central bank moves. So the Bank of England raised interest rates also by 75 basis points last night. Now it's largest single hike that we have seen since 1989, so it's historic. And this 75 basis points increase takes the bank rate to 3%. Now the BOE also warned of a prolonged recession going forward. That has been a big talking point. Remember, in fact, let's also listen into what the Bank of England Governor Andrew Bailey told CNBC on the rate hike trajectory going forward. Listen in.
There's been a very big movement in market interest rates during the course of August and September, and particularly when the market was going through a very turbulent period in the second half of September. Now we've seen some of that reverse, but it's still in the course of doing so. And so we spent a lot of time saying, how can we, in a sense, reconcile our view of the economy, our view of inflation, and where it was going to go to with the market curve? And we do this partly through our forecast. And we found it very hard to do. We don't have a rate in mind for the future because we take our decisions meeting by meeting. We have one of the largest upside risks to inflation in our forecast that we've had in the 25-year history of the MPC. A lot of that has to do with the tightness of the UK labour market. The UK labour market is very tight. Labour force has shrunk since immediately before COVID. So there are risks, and it'll be those risks that I think will have an important impact on how we, when we next meet in December, and then thereafter, how we think about policy decisions.
All right, that is the Bank of England governor. But with that, let's move on to another important story. The European Securities Market Regulator, the ESMA, has disqualified 6 Indian clearing companies, including CCIL, ICCL, as well as the NSE clearing company. This means that foreign banks who report to this regulator can't use the facilities of the CCIL, as well as, other clearing companies. So Lata is here to explain what's going on and the reason behind this disqualification. Lata.
Well, first, I must tell you that though it sounds like a disqualification on CCIL, the clearing corporations in India, it's actually a disadvantage for the foreign banks who operate, whom the ESMA regulates. Okay, now let me give you all the abbreviations first. ESMA is the European Union's securities market regulator. They have disqualified all those CCIL, ICCL, Clearing Corporation of India, Indian Clearing Corporation Limited, NSC Clearing, all those, that's the meaning of all those abbreviations. All the clearing companies which run the exchanges are being disqualified. The disqualification starts only on April 30th, so there's a good 6 months now. And the reason is that no cooperation agreements have been reached between the ESMA, the European regulator, and India, the guys who regulate the CCIL in India, which is RBI regulates CCIL, SEBI regulates the Indian Clearing Corp and the CCL, etc. So the two regulators have not reached cooperation agreements. Actually, the ESMA has a lot of rules that the qualifying companies will have to tick, and the CCIL ticks most of it. Only this one, the cooperation agreements, has not been ticked. Okay, let me tell you the background to the story. Basically, it is a principled argument from RBI. What RBI says is that what the ESMA wants is to supervise the books of CCIL and all these entities, because they are the counterparties every time a foreign bank whom they regulate has a dealing. For instance, say a Barclays, or not Barclays, a Deutsche Bank, SocGen, any of the French banks or German banks, if they do a deal in CCIL, CCIL becomes the counterparty. So if CCIL doesn't have enough money, Deutsche Bank is in a problem. So they want to regulate those entities. But usually, regulators everywhere have an understanding. If RBI certifies CCIL as good enough, ESMA should accept that certification. Just as if ESMA says Deutsche Bank is good enough, then RBI accepts that certification. So this is an ongoing conversation between ESMA and RBI. It's not really contentious. It's more a procedural thing. And chances are, according to Mr. R. Gandhi, whom I spoke with, he is a former RBI DG. So even in his time, these consultations were on. Now he is a non-executive chairman of CCIL. So, he says the conversations are going on. There is a good possibility that even before April 30th, the, disqualification will be removed. Now, what does it mean? The disqualification is not so much of a loss for CCIL, ICCL, etc., as it is a bother for the foreign banks. Now, what is the advantage of having a CCIL? You can net your transactions. Say a Deutsche Bank or someone does dealings with SBI, with so many mutual funds. Now, they buy bonds, treasury bills from everyone. In the end, at the end of the day, they get a net figure which they have to pay. Now, if you can't deal with CCIL as a counterparty, you have to do separate bilateral deals with each of the banks. Also, when you do a deal with one of these banks, you have to keep capital. Just as you have to, regulated entities, you'll end up keeping more capital. So it is the foreign banks who are prevailing upon their regulators to see reason or whatever to agree to a cooperation agreement very soon. That's where the story stands.
All right, very important development actually, and Lata will get us more details as and when things really move forward. But in Forex transaction, this is an important story. Now with that, we'll slip into a short breather on Business Lunch, but when we return, the air quality situation in the national capital continues to worsen. We'll put the spotlight there. Stay tuned. Welcome back. You're watching Business Lunch. And now let's focus on one important national development where the air quality in the national capital continues to remain a big concern for the entire country now. The air quality index has dipped to severe category, and the government has taken various measures, including closing primary schools, and is also mulling odd-even schemes. My colleague Danisha Anand is here with more details on the current situation and the steps being taken to address the situation. Danish, tell us.
Well, the air quality in the national capital has deteriorated, and for 2 days in a row, the air quality in Delhi is under the severe category. Well, earlier in the day, the Delhi government has decided to shut primary schools from tomorrow until the pollution levels fall back to the safer level. Besides this, the Delhi government will also rethink whether they will kick in odd-even scheme or not. But yesterday, we saw that after CAQM's directive came out, the GRAP level 4 restrictions have kicked in, and these restrictions have majorly halted the vehicular movement within the Delhi NCR. Trucks that run on diesel are not allowed to enter the Delhi. Only those trucks that are running on fuels like CNG will be allowed to enter Delhi. The Delhi government has also instructed its government offices to work with 50% workforce. But all in all, if we see, the air quality index in Delhi is not in a good category right now. There's several parts of the city where AQI has dipped to a very poor category. There's certain parts in the city where the AQI has breached a 700 point. So all in all, if we see, the air quality condition in Delhi is not healthy. It's not healthy to breathe air in Delhi, and it is expected that Delhi government will also be taking some more steps so that the citizens can live a safer life.
Danish, thanks a lot for bringing us all of the details. Nisha, we can only hope that these steps are, implemented quickly. This happens every time of the year,
Delhi, our national capital, gasping for clean air. That's a big, big situation to handle, Pavitra.
Yeah, so hopefully those steps will be put into place very soon. But with that, we're going to wind down on this edition of Business Lunch. The market is absolutely flat. You guys stay tuned. Mid-cap radar is up next.